So there is a problem if you're doing single family or small multifamily and expecting it to grow your wealth. And I'm going to share with you why that is. I had 4 single family houses and it didn't really get me the cash flow that I wanted. Most people that do single family do not become financially free doing it if it's less than somewhere between 10 and 20 years, which is a really long time, and it's too long for you to wait to become financially free. So friend, if you're open to it, I have a different way for you. Let's jump into it. I think you're going to enjoy this one. Okay, so I am not your investment advisor. Get your own financial advice. These are just my opinions. The problem with small multifamily, which I typically mean under 20 units particularly, and single family, is that there's very little or it's negative cash flow. What I mean by that is you buy this place, it's hard to find where the numbers pencil, or maybe you've got a back of the napkin illustration that shows you that this is going to be a great deal. But when it comes down to, and I've experienced this, that the costs in the property, the management costs, the tenant issues, the repairs on the property, particularly if it's an older property, they really eat into those the value of the property. And so you're really only looking at trying to find appreciation, right? And single family appreciation, small multifamily, it could, over time, it probably will grow, but it's a very long play. And people don't become financially free because they have lots of appreciation. People become financially free because they have cash flow, right? So if I have living expenses, if my living expenses, my basic living expenses are $5,000 or $7,000 a month, if I can get to there in cash flow, then I am free. I can leave my job. And that's exactly what I did, as I was able to replace my living expenses, not my income, but my living expenses with cash flow. Appreciation is great, but it's a potential thing for the future that doesn't allow you to actually take advantage of it. And in order to use it, you have to be able to sell your asset and actually eat into your equity, right? So cash flow is wonderful. So if you can have cash flow, it's way better. Another thing I say to people that own single family is if you can't 10x your investment strategy, then it's not really an effective strategy. So for me, if I had 4 houses, or maybe you've got 10 units, could you 10x that? Could I go to 40 units? It was like, that would just absolutely blow my mind. How in the world would I get to 40, right? I have trouble managing 4, right? Even though I wasn't the property manager, these were out of area properties. To manage that just seemed like absolutely insane. How could I do that? And for you, you may feel the same way. I feel tired. Even though I'm not the one managing these, I'm getting calls. I'm getting, hey, the tenant has this issue, or they're not paying, or this certain thing's happening with the property, right? It's a lot of work. And in reality, if it's not scalable, it's not really passive, it's not something that you can actually grow with it. Another part of that is that you're undervaluing your time. If you're somebody that makes more than $20 an hour, which I guarantee almost every single one of you watching this makes more than $20 an hour, right? If you own a business, there's no way you should be managing or acquiring or doing all these things yourself. If you look at all the hours that goes into all that, you can say, well, I enjoy it. But really, what is the goal? Is the goal to have enjoyment, or is the goal to become financially free? So a lot of times you're undervaluing your time. You don't see all this time that you're putting into it. You're actually probably losing money when you look at your normal hourly rates. So that's a big challenge with it. The last thing I'll say about it is just it's really hard to find good property management. For single family houses, you pay more for it. Typically, you pay 8 to 10% of the gross rents per month. Ouch, a lot of money. Even for small multifamily, maybe you're not paying as much, but until you get to about 60 units, you don't really have an efficient operation. You don't really have really good property management. That's typically because only at about 60 units, typically, sometimes a little less, a little more, it makes sense to have a full-time property manager that's just dedicated to that property, right? You have full-time maintenance people that are dedicated just to that property. So if you have 10, 20 units, if somebody's managing 3 or 4 or 5 of these versus managing one larger property, so it's challenging. So I would say, friend, that there is a better way that you can actually grow your wealth. You can grow both with cash flow and appreciation without taking up more of your time, right? It actually allows you to scale. So there's a better way, and really it's used doing these. It's large multifamily buildings. This is for most people. So again, if you're a high-paid professional, you own a business, your time is incredibly valuable. For me, I thought, I'm going to do the single family, do all this stuff myself, and then when I kind of graduate from that, I'll go to multifamily. I wish I had started earlier. There's a saying, when a student is ready, the teacher appears, but I would encourage you, and everybody I know in multifamily, start, go as big as you can, as quick as you can, whether that's as an active investor or it's a passive investor. But really the reason, how and why would you do this? Well, the why is that it's truly scalable, right? That you actually can grow your wealth much faster. You can grow, I was able to 20x my net worth over the last 4 years just by doing this strategy, helping investors to get into it, and also investing my own capital. So I'm a passive investor. I invest passively in deals to grow my wealth. I'm also an active investor where I manage other people's stuff. So how would you do that, right? If you're a professional and you own a business, how would you actually get involved with this? Well, if you have the desire, if you have the money and you don't have the time, then put it passively into deals. You'll find that groups like ours or other groups, you'll find that your returns are going to be the same or substantially better. I would say if you're doing single family or small multi, it's going to be much, much better in a syndication because it's a much more efficient asset. And you're working with a team, hopefully, that has a lot of experience, it has a track record that can show, hey, we are really good at increasing the value of this investment. Here's some specific examples of how we've done that, and we can share that with people. And other groups will do the same. They'll be able to share that with you. So there's a way you can do it as a passive investor to really grow your wealth without taking up more of your time. And I've watched many investors do this over the years where they've invested in 10, 20, 30 deals. They've replaced their passive income. They've dramatically grown their wealth, which is a huge way. If you don't have the money or you would rather be more active, which some people do, I would say go the larger route, right? Two ways typically people enter into syndications from an active side is that they either raise money like we do, we raise money for deals, or you're somebody who actually goes and finds deals. Those are kind of usually the two ways in if you're somebody who's kind of new to the industry. So those are a couple ways to get in if you want to be more active. And so, okay, Bronson, that's great. You just totally burst my bubble. You burst my paradigm. I just sell all my small multifamilies. I just sell all my houses. Well, what should I do? Well, one possible solution to this is you could 1031 exchange into a syndication. So that means you would sell one house, you would sell multiple houses. Sometimes you can sell them as a package. People that have sold, sometimes 10 or 20 houses and rolled that money into a syndication like this one, right? So how does that actually work? Well, basically a 1031 exchange is a tax-exempt exchange that says you can sell your property, and if there's very tight timelines, but allows you to basically roll into something on a tax-exempt basis into a larger deal. And so we've had a couple investors do this in 2022. We had an investor come with over $500,000 from a sale of a couple of houses, or about the same time, rolled into a syndication. We had another investor who came with about $1 million and selling a house in California and was able to roll into a syndication. So really, really powerful. It doesn't make sense if it's less than $500,000, so don't, it's probably not worth 50 or 100K just because of the work it takes to do it. So rolling into another deal can be very powerful. I would also say just learning about syndication. I remember the first time I heard the word syndication, I thought, what is this? I mean, syndication sounds like aren't there mob syndications and for organized crime or something? Or there's syndication as like TV shows are syndicated where they're sent out different places. So I didn't really have a context for it. But syndication, really learning about how it works, right? Learning how people raise money to do big deals, learning what really reputable operators are doing is really, really powerful. So I encourage you to go to meetups, go to conferences, go to events, read books, meet other people. One of the most powerful relationships and people that you can meet is another passive investor. And why is that? It's because this is somebody who's experienced and they typically have nothing to sell you, right? We have our deals we're doing. I'm sharing just from the heart what I feel is true, but still we have, our stuff that we do. We want to bring investors to our deals. A passive investor is just simply saying, hey, I just want to do the best, make the best investment with my money, and I want to maybe help other people and kind of do it along with them. So that's a really powerful relationship when you meet somebody who's a full-time passive investor. So I encourage you to look for that person, get to know them, develop a relationship with them. A lot of times people are very willing to share what they've learned, both their mistakes as well as their successes. So summary, go big or go home. Don't go after the small stuff. I wish I had gone after bigger stuff sooner. Almost everybody that I know that does big stuff says, man, I really wish I had gone bigger sooner. But learn about syndication, scale, invest your money, or you can raise money, you can find deals. But I think the biggest thing is just single family and small multifamily typically will not get you to your goal, or it won't get you there fast enough when compared to larger multifamily. I want to share this quote with you, which I love. It says, ask yourself, how long am I going to work to make my dreams come true? And I suggest you answer, as long as it takes, Jim Rohn. So, again, whatever your dream is, just commit to it and say, it doesn't matter how long it takes, I'm going to go for it. And that's what I've done. I wanted to share this video with you that I think you'll like. It's the secret to retiring with high cash flow. So check that out up here. And if you haven't joined our investment club, we'd love to build a relationship with you. We have deals that we can't really share publicly. There's some stuff we have in the alternative asset space in multifamily. There's stuff that's in our ATM machine fund. We also have some stuff in the alternative energy space. So go to bronsonequity.com or click the link below. We'd love to set up a call and start a relationship with you. And thanks for taking the time to educate yourself. We'll look forward to seeing you on the next video.